My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat.
Chicago wheat. The first part of last week saw the market mostly take a breather within what I considered then to be an imperfect bright green mid-January to date bull channel, currently 595 to 625. However, from Thursday last week, prices turned higher before and after the long weekend, a resurgence upwards of the move that has been here since the start of the year, such that prices started eyeing the 50% Fibonacci line of the May to August 2024 move at 630. And possibly the 50% Fibonacci line of the March to August 2024 move at 658. The move up pushed through the bright red middle time, currently at 599, of the late August 2024 to mid-January 2025 bullish shift pitchfork, but stalled at the bright green upper bull channel line before dropping back down to the bright red middle time, seemingly set to utilize this bright green middle time as a base of support. In the overall picture, there are two, possibly three major features that have developed, or should I say are developing in this market. The first, and by far the largest, is the late May 2024 to date possible very large double bottom pattern. We're at this moment constructing the second up leg in this pattern, and the key to the breakout upwards, I suspect, will be at or around the previously mentioned 50% Fibonacci line of the May to August 2024 move at 630. Though it could be as high as the next 50% Fibonacci line of the March to August 2024 move at 658. And I'm sorry for being a bit vague here, but this is really a very large pattern. The second pattern is more recent, though still quite big. It is the early October to date rounded bottom pattern. Here I would also look to the 50% Fibonacci line at 630 as the final point of the construction and the start of the breakout. However, there is an argument for looking at the congestion in late October in the 583 to 592 area, just around where the gold long moving average is situated, and that's currently at 587, as being the breakout point, though I am more cautious and would still favour the higher 630 area. However, just keep a wary eye open for that 588 area just in case. Finally, I should actually say 587 area, I would say. Yeah, 588 area, let's say that. Finally, I have both the dark blue bullish Andrews pitchfork and also the previously mentioned bright red bullish shift pitchfork here for the same late August 2024 to early January 2025 move, both of them on the same daily chart. I am usually loath to put both pitchforks on at the same time, but for now both still fit, with the market being in between the dark blue middle time above, currently at 658, and the dark blue lower time below, currently 569, and also prices, as I've said earlier, being just over the bright red middle time. Both of these in their own way are supporting this move higher. So what have we in the way above that might change this seemingly significant attempt higher? Well, not a lot. Personally, I think you would likely have to utilize the 250% Fibonacci lines at 630 and 658 to try and do that, but topside continues to seem vulnerable right now. Chicago corn. The green short medium moving average below the market, currently at 478, had between September to December 2024 shown a significant support to this market, halting a decline and starting a rally, which is still evident today. 15 weeks ago, I asked the following question, I quote, "The key question will be whether prices can attain the early October highs between 450 to 455, or will the erosion of the bullish incentive by, for example, the long moving average, or the November 2020 high at 439, whether this will be enough to prevent prices from trading higher," end of quote. Well, the 450 to 455 area topside did cap the prices for a small amount of time, but by late December last year, the market had, with the aid of the late September to late December 2024 sideways triangle and the new dark blue early December based uptrend, currently at 502, pushed up higher through the highs of May 2024 at 480 and 484 and up into the congestion band 491 to 498. This started to erode the bullish incentive, but prices still nevertheless continue pushing higher, pushing up through the next small band of congestion between 505 to 506, made up from the 50% Fibonacci line of the June to August 2024 move at 505, which saw a further hesitation until late last week when the market started utilizing it as a base of support. Last week I said about this move upwards, and I quote, "However, we still might see further hesitation, as though the top side seemingly has limited resistances. The ones it does have, and there are two significant ones, they are likely to cause some second thoughts. You see, not far overhead we have the combination of the October 2021 low and the 50% Fibonacci line of the June 2013 to February 2024 move, both at 516. Then a little higher still when we have another significant congestion combination of the 2014 high and the 61.8% absolute Fibonacci line, both at 525. These will be the levels to watch out for." End of quote. This latest move higher followed on from the wannabe weekly key reversal up 2 weeks ago that ended up as a lesser outside week. All these detail the topside resistances and opportunities. So now let's look instead at the downside risks. And the most obvious and significant feature is the early December 2024 to date dark blue uptrend, currently at 502. This is a multi-pointer uptrend and has been justified most recently 3 Mondays ago and arguably on Wednesday last week. If this breaks, and so far it's not going to break, so far it still looks good. If this breaks, then we may see a significant move lower, right down possibly as far as an initial move down to the 460 to 65 zone. So please be wary and very aware of this risk. Kansas City wheat. The early part of last week was a breather for the market within a bright green late January to date bull channel, currently 614 to 659. However, from Thursday last week right into almost the middle of this week, there was a resurgence higher that was part of the move up here seen since just after the start of the year. Last week, the move up here did not look like as consolidated as in Chicago wheat, but this has improved this week. The market has now moved up over the interesting 38.2% Fibonacci line, the big old 2011 to 2019 move at 618, and is stabilizing over it. It is now eyeing the October 2024 highs at 638 and 635, as well as the January 2015 high at 646 that effectively capped the market back then. In the overall picture, much like Chicago wheat, this market here had been the story of 2, possibly 3 major features that have developed, or should I say are developing in this market. The first, and by far the largest, is the late May 2024 to date possible very large double bottom pattern here. We are at this time constructing the second up leg in this pattern, and key to the breakout upwards, I suspect, will be around the January 2015 high at 646. This really is a very large pattern. The second pattern is more recent, though still quite big. It is the early October 2024 to date rounded bottom pattern. Here I would also look to the January 2015 high at 646 as the final point of construction and the start of the breakout. However, there is an argument for looking at the congestion in late October to early November last year, based around where the flatlining gold long moving average is situated, which is currently at 594, as being the breakout point, though I am more cautious and would still favour the higher 646 area. However, just keep a wary eye out for that 594 area, just in case. Finally, unlike Chicago wheat, we only have the one bullish pitchfork here, a dark blue, shallowy bullish shift pitchfork for the late August to early December 2024 move to look at. The market has stabilized over the dark blue middle time, currently at 650, just over the January 2015 high. So what have we in the way above that might change these build up or bullish incentives? Well, not a lot. Overall, the top side does seem vulnerable right now.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.